Disclaimer: this video is for informational and entertainment purposes only and does not constitute financial advice. The channel is not run by financial advisors. Everything you thought you knew about money in 2024, gone. The financial landscape has been completely rewritten. Welcome to 2026, where the rules have changed, where AI and technology have revolutionized the future for decades to come, and the wealthiest investors are playing an all-new game. If you want to build real wealth, you need to adapt fast. This is the 2026 Wealth Blueprint, 10 assets you need to own right now if you want to win. We'll break down each one, and for every asset, I'll tell you the cash flow required to get started, ranked from highest to lowest. Let's dive in with real strategies, examples, and the latest data. It's important at some point in your life journey to just stop everything. Do it right now. Clear your mind completely, focus, sit back and relax, grab a chair. Let's get into it. Create an open mind without bias, and just try and make sense of as much as possible. I strongly recommend watching this video a few times, or pause and go back to points you did not understand during the course of the video. This will be a pivotal decision to help you gain a comprehensive understanding of what you need to know. Only then can you follow a course of action. Remember, without understanding, nothing can really be taken away and implemented. The core focus of this video is to help people navigate their finances better in the future. Let's start with the asset that requires the highest cash flow: AI infrastructure. To make a meaningful investment in this space, think direct stakes in data centers, energy suppliers, or infrastructure ETFs. You'll typically need $10,000 or more to see significant returns. In 2026, the AI boom is the new gold rush, except this time, AI itself is the gold. But just like in the 1800s, when Levi's made a fortune selling jeans to gold miners, today's real winners are the companies providing the picks and shovels. That means electricity and data centers. Instead of chasing Nvidia stock, savvy investors are looking at energy suppliers like Uranium Energy Corp, UEC, which fuels the massive power needs of AI. On the tech side, companies like AEHR Test Systems, Applied Digital, APLD, Nebius, and Coherent are delivering the chips, cooling, and infrastructure that keep AI running. For example, AEHR's stock soared in 2025 as demand for chip testing exploded and APLD expanded its data center footprint to meet surging AI workloads. Here's a strategy: look for ETFs focused on infrastructure, or invest directly in REITs that own data centers. And remember, the backbone of AI, energy and data infrastructure, is where the real money is being made. Next, the ETF all-weather pivot. To build a diversified, inflation-resistant ETF portfolio, you'll want at least $5,000 in cash flow to allocate across tech, commodities, and bonds for meaningful growth. The classic 60-40 portfolio is outpaced by inflation and volatility. In 2026, top-performing portfolios blend high-yield tech ETFs like Invesco QQQM with commodity ETFs such as Invesco Optimum Yield Diversified Commodity Strategy, PDBC. For example, in 2025, a portfolio split 50, 30, or 20 between QQM, PDBC, and iShares TIPS Bond ETF, TIP, outperformed the S&P 500 by 8%. Here's a tip: use auto-rebalancing platforms like M1 Finance to maintain your allocation. And BlackRock's latest report shows commodity exposure is now essential for inflation resilience. Third, Web3 utility. To participate in smart contract platforms or invest in blockchain infrastructure, you'll generally need $2,000 or more in cash flow to buy meaningful positions in coins or stocks. But here's what's truly game-changing in 2026. The USA and major global banks are now leading the charge in tokenizing real-world assets. Think real estate, bonds, and even commodities, thanks to new laws and regulatory clarity. This isn't just about crypto speculation anymore. With the SEC and Congress passing landmark legislation, banks like JP Morgan and Citi are rolling out tokenized versions of traditional assets, making them more accessible, liquid, and transparent than ever before. For example, Over 30% of new real estate titles in the US are now issued on blockchain, cutting closing times by 60%. Propi, a blockchain real estate platform, helped a Miami investor close a property deal in 24 hours, saving $4,000 in fees. Here's what you can do. Invest in platforms with real adoption, like Chainlink or Ethereum, or in publicly listed companies like Coinbase, Coin, that are building the infrastructure for blockchain transactions. Deloitte predicts smart contract adoption will triple by 2027, and the tokenization of real-world assets is set to unlock trillions in value, transforming how we invest, own, and transfer everything from property to art. In the data center space, crypto mining companies like Riot Platforms, Riot, and Marathon Digital, Mara, pivoted in 2025, shifting from mining crypto to renting out their massive data storage and compute capacity to AI firms, creating a new revenue stream and boosting their stock performance. The bottom line? The convergence of regulation, banking, and blockchain is making Web3 utility a must-have asset class for the future. Fourth, high-yield cash management. You can start optimizing your cash flow with as little as $1,000, but to maximize returns, aim for $5,000 or more in high-yield savings accounts. With inflation still above 3%, parking cash in 0.1% accounts is a losing game. In 2026, online banks like Ally Financial, Ally, and Goldman Sachs' Marcus offer 4.5% plus APY on savings. For example, rotating $50,000 into the top-yielding accounts each quarter netted one investor an extra $1 in $800 in 2025. Here's a strategy. Set quarterly reminders to review rates and move funds, and don't forget to use comparison tools like Bankrate to find the best rates and automate transfers. Fifth, tax minimization. To benefit from entity formation and tax strategies, you'll need at least $1,000–$2,000 in annual side income to justify the costs of setting up an LLC or S-Corp. The wealthy don't just earn more, they keep more. In 2026, shifting from W-2 to K-1 income via LLCs or S-Corp is mainstream. For example, a freelance consultant formed an S-Corp, saving $12,000 in self-employment taxes last year. Here's what you can do. Consult a CPA about forming an entity for your side income. Intuit, INTU, the company behind TurboTax, has seen a surge in small business tax filings, and IRS data shows S-Corp adoption among small businesses is up 40% since 2024. Sixth, 401k consolidation. To make consolidation worthwhile, you'll want at least $1,000 in scattered retirement accounts, but the more you have, the greater the impact on fees and returns. The average American has 3 or more forgotten retirement accounts. In 2026, rolling them into a single IRA can cut fees by up to 1% annually. For example, after consolidating, one investor boosted their net returns by $7,500 over 5 years. Here's a tip. Use platforms like Fidelity, FIS, or Charles Schwab, SCHW, for a seamless transfer. Morningstar reports that consolidated accounts outperform scattered ones due to lower fees and better asset allocation. If you've automated even a single investment, drop a 2026 in the comments. We would very much appreciate a like and subscribe from viewers to help the algorithm on YouTube and allow us to continue to bring revolutionary future videos and support the channel growth, sustainability, and longevity. Now, let's move on to alternatives. Seventh, fractional real estate. You can get started with as little as $100, but to see meaningful cash flow, aim for $1,000 or more invested across multiple properties. In 2026, you don't need to buy a whole building. Platforms like Fundrise and Realty Mogul let you own shares of industrial warehouses and solar farms. For example, a $5,000 investment in a Texas solar project returned 12% in 2025. Here's what you can do. Start with as little as $100 and diversify across multiple properties. Nariat data shows industrial and renewable real estate outperformed residential by 6% last year. And if you want to go public, look at companies like Prologis, PLD, and NextEra Energy, NEE, which are leaders in industrial and renewable real estate. 8th, Frugal Living 2.0. This asset is all about freeing up cash flow. No minimum required, but the more you save, the more you can invest elsewhere. It's not about skipping lattes, it's about cutting invisible expenses. In 2026, the average household has 6 unused subscriptions. For example, one family canceled 4 streaming services, saving $720 a year, enough to max out a Roth IRA. Here's a tip. Use apps like Rocket Money, owned by Rocket Companies, RKT, or Intuit's Mint to track and cancel subscriptions automatically. Financial planners say subscription creep is the #1 silent wealth killer for millennials. 9th, passive digital assets. You can start with $0 if you have skills and time, but most people invest $100–500 to launch a course or deploy a chatbot. In 2026, AI-generated courses and GPT-powered chatbots are the new rental properties. For example, a teacher launched an AI course on Teachable, earning $2,000 a month with 0 ongoing work. Here's what you can do. Use platforms like Udemy, UDMY, or Coursera, CoUR, to launch digital products or deploy GPT agents for customer service. Statista projects the digital asset market will hit $400 billion by 2027. And finally, 10th, financial goal systems. This requires no cash flow to start, just discipline and the use of free or low-cost apps. Winners in 2026 automate everything. For example, using apps like You Need a Budget, YNAB, or Monarch Money, one user tracked every dollar daily and doubled their savings rate in a year. Here's a tip. Set up automated transfers for savings and investments, and review your dashboard every morning. A Harvard study found that daily money tracking increases net worth growth by 15% annually. Subscribe now. This is your first and easiest investment of the year. I'll see you in the next deep dive. Stay ahead.